Hey there, Hector here. I am recording today the GBP against the CHF, or what's the same, the sterling pound against the Swiss franc. We are looking into the 1 hour time frame, and the reasons of why I am recording this video is because I believe there may be a London Open breakout type of trade in the play, right? I still haven't taken the trade. The London market has just opened. In fact, we are already seeing the beginning of a momentum down there, but like I say, the market has just opened. I haven't taken any trade. I still need to get my signal. As usual, that's gonna take a little bit of time, so I decided to record this quick video. Now, let me go through the basics of the trade, just so you have an idea of what I am seeing myself on my chart. If I scroll back a few days, we see that we've had the previous week a few days of an uptrend, of quite a healthy up move, and from there this week seems like price has begun to trend down. In fact, the daily box indicator is printing two boxes in red in a row. As you guys know, I like to see 2 or 3 days, at least two. Okay, two is my minimum in a consecutive or moving consecutively in the same direction, right? Either to the upside or to the downside. This time around is to the downside, of course. So it seems like so far we are going through a little bit of a healthy intra-week downtrend, and whenever I see an intra-week trend, I always like to follow the open breakout in order to search actually either for a continuation breakout or for a reversal breakout. Both of them are equally valid in my book. Now, apart from that intra-week trend, I'm also liking how the Tokyo session has been rather flat. Actually, let me zoom in a little bit more. There we are. So that's the beginning of the Tokyo session. 1, 2, 3, 4, 5, 6, 7, 8, and that's the first bar of the London session. Anyway, so like I was saying before, a rather flat, tight, sideways price action through the Tokyo range. Do you see how I can, compress the Tokyo session in a rather narrow range, right? Also, this range takes place more or less at the end, at the extreme, in this case the lower extreme of the previous day's range. Okay, another requirement for the London Open breakout, even though I would have liked, in fact, this range to I would have loved this range to take place somewhere around here. This would have been the ideal location, either there or there, right? Both of them are equally valid. You don't want, at any rate, the range to take place down there. But well, it's within the lower 33% of the previous day, so I guess it's still valid, perhaps not ideal, but still valid nonetheless. All right. So all in all, what we have is an intra-week trend, sideways price action through the Tokyo range at the lower end of the previous day's range, and now waiting for the first hour or two of the London session to print some volume, some activity, some volatility actually in the market in order to see a healthy move either down or up. Okay? Well, anyway, so course of action here. If I get a breakout to the upside, meaning a reversal breakout, I'm gonna be shooting for, or as usual, I like to look into the average daily range, which takes me all the way up there around the 144.75, 144.80, somewhere around there. But considering that I have the previous day's range top at that level, I may like to play it a little conservative. As you guys know, I like to be conservative with my intraday targets. Moreover, we have the 144.50 level in there, so I may be shooting for the 144.45. Just a few pips, 5 pips to be exact, before hitting the 144.50. Again, we have an intraday level of support and resistance, at least a round number, a pivotal point from an intraday point of view. We also have the previous day's high, so I don't see any reason as of why I should stretch my target all the way to the average, to the 100% average daily range extension, which, like I say, comes somewhere around there. I'm gonna play conservative and I will exit the trade in there. Now, on the other hand, if the breakout is to the downside, well, I think I have a little bit more of room here, since there is no further level of support, at least from an intra-week point of view, anywhere down there. All right, so I guess I can be a little bit more aggressive with my trade. So what I'm going to do is actually I'm going to split my profit takings in two levels. One, the first one, as usual, is going to be based around the immediate next round number, 143.50, as usual, 5 pips before hitting that level, 143.55. Again, 5 pips above the immediate next round number. And then once that level is broken, if it is broken, hopefully will be broken, if that level is broken, I will simply stretch out my second profit taking level to the to my usual procedure, 80% of the average daily range. The 100% average daily range actually takes me all the way to 143.25 down there. I will probably exit at 143.35. All right. Again, just so I don't get overly greedy with my targets, you know, no need to try to squeeze the 100% of the average daily range. I would be happy to pocket just 80% of it. Still, very nice profits in my book. So again, two profit taking levels, one there immediately above the round number, and another one down there at the 80% of the average daily range. All right. Okay, guys, well, that's pretty much all. Now I'm gonna wait to see if we get any momentum on the London Open breakout, which is already happening right now as I record this video. If I see that price continues to meander sideways, I will simply cancel any possible trade, because in might mean that today we are facing a rather stagnant market condition, and I only trade the London Open breakout strategy whenever I see a lively, momentum-filled market for today. All right, at least for the first few hours of the London session. Anyway, let's not overstretch this video too long. If I do get my entry, I will let you guys know, and I will update the video accordingly. Thank you. Bye-bye. Alright, it's been just a few minutes since the last update. It seems like the momentum, the London momentum, is already taking place. Take a look at that beautiful long candle. In this case, to the downside, okay, that means that the momentum is already starting to show up as London-based traders begin to sit on the respective trading desks, right? As you guys know, in case you don't know, let me tell you that London is by far the world capital as far as forex trading goes. It's by far the well, you know, the financial hub, moving, you know, most of the volume as far as currency goes. And as those institutional traders working in the London city sit on their respective trading desks, well, this type of stuff usually happens. Okay, momentum begins to appear in the market, and you start getting longer and longer candles than what you usually see through Tokyo. All right, that's the reason as of why these market accelerations do happen in the market. Anyway, let me cut down the mumbo jumbo and let's get back to the chart. So seems like we are finally getting a breakout to the downside, but there is one little thing, one little detail that's kind of troubling me as far as this specific setup goes, and that's yesterday's low. All right, that's precisely why you want to see the Tokyo range at the lower end, or the upper end, either way, but at any rate at the extreme end of the previous day's range. So once the Tokyo range is broken, all right, and you can search for your breakout pullback continuation pattern, you are not facing down there any further support from the previous day's low, because it's already broken, right? However, if the range takes place above the previous day's low, or imagine we were looking for a long breakout, right, for a long trade, well, and if the range was there, by the time the breakout takes place, we would still be facing yesterday's resistance in the market, right? And as you guys know, I don't like to sell against support. I don't like to buy against resistance. So that's kind of troubling me. Imagine we get now a breakout pullback continuation pattern. If I trigger my sell entry there, I would have immediately, let's say 10 pips below another support level. And like I said before, I don't like to sell against support, right? That doesn't make any sense. It's not sensible. So what I'm gonna do is any entry that I may get here on any breakout pullback continuation pattern, I will trigger at any rate under yesterday's low. Okay, so what I'm gonna do is I'm not gonna be triggering my trade anywhere in there, as I should do from a theoretical point of view, but because of this precise factor and because I like to take my trades where, you know, at whatever junction in the chart that shows no further support ahead of my trade, okay? So what I'm gonna do, if I do eventually get this breakout pullback continuation pattern, you never know, this thing may easily turn around and never give me an entry signal, but if it does, I will wait for this level to clear out. So this is the area where I will be looking to take my trade. All right. Anyway, I just wanted to clear that up. Now I'm gonna pause the video and update it as the trade unfold, if it is eventually to become a trade indeed. Okay. Cheers, guys. Talk to you soon. Bye-bye. Hey guys, Hector here. Another quick update. As you can see, this thing is actually taking off without me. We are starting to really see that early London momentum in the market, and price has already moved from here all the way down here, around 40 pips. So far I haven't been able to get my entry, so I am kind of missing this boat, so to speak. I don't know. I'm a little hesitant here, guys, to be honest. Okay, this is what I'm gonna do. This is what I'm thinking. I'm gonna still wait for a second pullback, see if if the markets are kind enough, nice enough or generous enough to give me a second pullback, and from there, perhaps I may get another continuation. Okay, the thing is that we kind of got a shaky breakout pullback continuation pattern. Let me zoom in a little bit more, just in case you guys don't see that. Alright, so we got the first breakout candle, then a rather shaky bar, which is, I don't know if it really could be considered as a pullback candle. Yeah, sure, it did break the lower band of the Tokyo range. It did kind of trade under that under that lower range, and from there price did continue, or did give out the continuation candle, another beautiful momentum candle. But I'm usually rather dislike these hesitant continuation pullback candles. I do like to see a full breakout pullback continuation pattern. The most, let's say, the most beautiful and harmonic the swing is, usually the better the trading opportunity turns out to be, right? So now that I've missed this first entry, okay, I've totally missed this one, but at least what I like is that price has cleared out yesterday's low. All right, I was mentioning this specific, this precise situation on a previous update of this video. I was looking to see a full breakout of the previous day's low, right? And now all I have to do, or actually all I can do really, is to wait, is to wait for another pullback. If the market is kind enough to give me that pullback, I may get a second entry opportunity. If it doesn't, if it simply continues to take off without me, well, not much I can do about it. I'll have to simply tip my hat to the market and search for trading opportunities somewhere else. All right. Anyway, guys, I'll keep you updated. Bye-bye. Hey there, Hector here again. Final update on this trade because I've decided to chicken out. I shamelessly declare and admit that I've decided not to take the trade. I'm going to explain the reasons of why I've decided in the last moment. Well, not really in the last moment. I was already seeing this thing happening as per the last hour. Even if I got my entry from a money management point of view, this is feasible no longer. So I don't really remember where I left the last update of this video. I think I was updating you guys as how this initial breakout was taking place without me. But at any rate, I was expecting, or rather hoping, for another pullback, right? Another pullback to retest the low of the Tokyo range once again, perhaps the low of these lows here, yesterday's lows actually. So perhaps I was looking to see this type of breakout pullback continuation pattern, something like that, something that could give me a possibility to pull the trigger. All right, since I totally missed this initial entry there. However, this second pullback took me all the way up there back to the round number pivotal point as usual from an intraday point of view. Price retraced all the way back there. It found resistance, as price usually does, around numbers from an intraday point of view, and from there it's taken off once again in momentum, right? A beautiful momentum, but nonetheless, the problem is that if I trigger my entry right there at current market price 143.61 or 60 right now, and from here to my stop loss level, which should be 144.05, that's a 45 pip stop loss plus the spread. That's too long. That's, I mean, 45 pip stop loss is entirely okay depending on the scenario. In this particular scenario, I would get a rather poor, a rather low risk-reward ratio, because if you remember, my first profit taking level was to be placed right there, right above the 143.50. So I would hardly be able to squeeze even 10 pips on my first portion of the trade. Then I was considering stretching my second portion of the trade all the way down to around 143.30. Right, which is another 20 pips down below. Okay, so all in all, I would be looking to squeeze this much out of this trade, and in order to do so, I would have to risk this much. All right, do you see how it's not even a 1-to-1 risk-reward ratio? Okay, it's not really a very sensible trade from a money management point of view. The problem here is that this breakout pullback continuation pattern was just too wide. Okay, I would have liked to see a rather tighter, something like that. Okay, instead we got a full, rather wild swing, and therefore the distance from the entry to the stop loss is far too great to make it I won't say profitable. I mean, I don't know whether this trade is going to be profitable or not. You don't know that in advance. You never know that when you are trading, but at least you can, make a quick calculation. And, it doesn't make any sense to risk, like I said before, 45 pips in order to aim for about 30, 35 all in all. Not really any it's not good business to trade under a negative risk-reward ratio. So, given the circumstances, and despite the fact that all in all the setup is still valid from a technical point of view, okay, we still get that breakout in the direction of the intra-week trend. We still got a beautiful Tokyo range. We still got the breakout pullback continuation pattern. We've still cleared the previous day's lows. So again, from a technical point of view, this setup is totally valid. From a money management point of view, it's not anymore, and therefore, being the conservative chicken that I am, I have to bail out and I have to simply pass altogether on this trade. Anyway guys, I hope you enjoyed this video. Cheers, bye bye. Hey guys, Hector here. Just a final update now that I am looking to. I'm gonna close my trading station for the day, and I just wanted to update you on whatever happened on that trade that I was showing you guys this morning on the sterling pound against the Swiss franc. Actually, it was not a trade; it was a setup. Since, as you know, I eventually didn't take the trade. Okay, so needless to say, the sterling pound against the Swiss franc dropped like a rock for over 120 pips to the downside all through the London session, right? And certainly my first and second target would have both been hit rather fast. Obviously, I didn't profit from none of that, but all in all, I still believe I took the sensible decision, guys. I still believe I took the right decision here. You see, sometimes when you're trading, you have all the ducks in line, all the elements come together, and especially from a technical point of view, you certainly have a valid setup and your prediction is quite alright, it's quite good. I mean, we were seeing the intra-week downtrend, didn't we? We did see the tight horizontal Tokyo range, we did see the breakout on the first hour of the London session, and finally we did see the pullback and the continuation. We saw everything, right? So our analysis was 100% correct, and needless to say, since the London Open breakout strategy does work, as a result, price gave us some nice profits, or actually didn't, but it would have given us some nice profits. It's just that we couldn't justify taking this trade because we were trading under a negative risk-reward ratio, and that's never a wise decision. I don't care if all the ducks fall in line. I don't care if I have absolutely every single light in green. Okay, I don't care if I am trading under a negative risk-reward ratio. That's a trade that I just don't want to be involved with, right? You know what they say, guys, it's usually better to be out of a trade you wished you were in, right, than to be in a trade you wished you were out, right? And well, that's the case here. That's a trade that I was out, and perhaps I may have wished that I was in, perhaps I may have wished that I had taken it. But all in all, if I am to be rational, if I am to be logical and sensible in my trading, I must concur, I must determine that I did take the right decision staying out of the market on this one. So the reasons of why I recorded this final update is to let you know, guys, that sometimes this kind of thing happens, and don't you think for a second that you took the right decision staying out of this trade. You didn't, or we didn't. Okay, it was a solid trading decision, and in the long term, these kind of decisions will lean on your side. On the long term, these kind of decisions will save you more money than you will make, right? They will keep you away from more losing trades than they will get you on winning trades, right? So all in all, if you put it in a long-term balance, you will see that on the long term, again, the balance will tilt on your side. All right, so I don't feel bad at all about this trade. I took the right decision. It just didn't work out the way it just didn't work out my way, but still, it was a solid trading decision. Anyway, guys, that's all for today. I'm gonna call it a day, close down my trading station, and it's time to go out to enjoy the rest of the day. Cheers, bye-bye.